show that GDP slumped by 9.6%, slightly faster than the 9.5% drop previously reported in January. The revised GDP translates to economic losses worth 1.58 trillion pesos, up from the initial estimate of 1.54 trillion pesos. Downward adjustments were also noted in some sectors, including manufacturing and services. The PSA said revisions are based on updated data submitted by data source agencies. The country plunged into a recession last year due to a downturn brought by the COVID-19 pandemic. The government expects the economy to recover this year with a growth forecast of 6.5 to 7.5%. Local firms are becoming more optimistic for the rest of the year, but the reimposition of stricter lockdowns still threaten to dampen that sentiment. Based on the BSP's latest business expectation survey, overall business confidence improved to 17.4% in the first 3 months of the year. That's from a 10.6% reading in the fourth quarter of 2020. This is the highest reading since the 23.3% print recorded in the first quarter of last year before the pandemic's impact truly blew up. The confidence index reading for business outlook for the second quarter also improved to 42.8% from 37.4% previously. BSP Economic Statistics Senior Director Paulo Alegre says the increased optimism could be traced to the reopening of certain businesses as well as more people adapting to the new normal. He noted that the vaccine rollout also contributed to the firm's more upbeat outlook. But Alegre also pointed out that there were dips in optimism whenever a more stringent lockdown is imposed. The BSP officials said the uncertainty brought about by the ECQ and other stringent lockdowns can weigh on business sentiment in the second quarter and beyond. All right, local bourse on the trading break today as the country observes the Day of Valor. Yesterday, of course, just for a quick recap here, investors took profits, pushing the index to snap out of its 3-day rally, slumping 1.6% to 6,545.17 over a 4-day period here. As you can see, the index here at least increasing close to 0.8%. Now, moving forward, traders expected to keep an eye on the progress of the country's vaccine rollout after the FDA suspended the use of AstraZeneca on those aged 60 and below, while also green-lighting the use of Sinovac for senior citizens. Another thing that they'll be monitoring, of course, the containment of COVID-19 infections. That rose yesterday by more than 9,200 active cases, now at its highest, 167,000. That's accounting for 20% of the total 828,000 total infections in the country. Across Asia, gauges looking mixed here following a rally in the U.S. That's after Fed Chairman Jerome Powell said that the central bank can reinvigorate the economy without stoking painful inflation. As you can see here, Japanese shares here, at least in the positive territory, the Nikkei has gained 0.8%. The topics likewise not far behind, in fact, increasing close to 0.75%. Korean shares, however, swinging between gains and losses here. Before the start of the broadcast, Korean shares, the Kospi, was in the green, but as you can see right now, it's declining 0.2% so far in the day. Aussie stocks likewise also slipping here over 0.25%, close to 0.3% really here. That, of course, the S&P 200 declining at the start of Friday's trade here. Again, of course, a local stock, the PSEI, declining, snapping out of a 3-day rally as it closes today for the Day of Valor. The president has decreed to lower tariff rates on pork imports to the outrage of local hog raisers. Is this the right move to make to fill the gap in supply and to stabilize price of pork? Let's discuss that with the president of the Meat Importers and Traders Association, Jesus Cham. Good afternoon, Sir Jes.
Good morning, Jes.
All right, sir. So importers like you, no doubt, of course, welcome the move. But do you feel that there is also basis for fears of local producers that this might kill the local hog industry?
Well, they are really down, unfortunately, because there really is no vaccine to ASF. And since a lot of our farms are backyard farms, that they do not invest in biosecurity, so it is really very, very difficult for them to keep ASF out of their farms. So basically, at this time, they have nothing to offer. They are apprehensive. They cannot repopulate because they are afraid that they will be hit again by ASF. So until a vaccine is found, there is no other option other than to import.
Okay, so in this case, what would you suggest for them to do?
Well, of course, the larger farms should invest in biosecurity. The smaller farms, they are clustering. Actually, the Department of Agriculture has the right idea, although, of course, I'm not the expert in this. They have the right idea to cluster the hog production. And we have said to the government that the production area should be in charge of their biosecurity, and they should be responsible for keeping out the disease. So in this manner, the other pork can flow freely, have free access to all marketplaces, so the supply can reach the demand and the availability can stabilize to whatever extent it will stabilize. But then again, each farm should be responsible for its own biosecurity, and all the other restrictions on travel and movement should be removed.
But speaking honestly, do all farms have the capacity?
Well, again, that has been the problem because we know that the hog farming has been very profitable for the last decade. So they should have invested in their biosecurity. They should have taken care of their backyard, to put it that way. They should have looked after their own biosecurity. But again, for now, the bigger farms, it's not too late for them. They have the capacity. For the smaller farms, government can help them. The production maybe needs to shift to the more to the hinterlands where there is less population, less people. Then they can create production zones exclusively to animal husbandry, to pig farms, and try to keep people out of the way and not allow the people to flock around and build their residences there, although that has always been the case, unfortunately.
Well, that, of course, is always easier said than done there. But one, of course, of the sticking point here in the EO, the lowering of the tariff. Do you think it's really warranted? As it is, some lawmakers are of the opinion that previous rates are already low. Won't increasing the MAP instead do the trick to address supply issues?
Well, there is, of course, a disagreement on what is low because 30% import duty is very, very high. 40% import duty is very, very high. The Philippines has the highest import duty for pork and poultry in the world. And even in the Philippine, the tariff book, very few items have 30-40% import tariff in the Philippines. You know, we can import fully cooked foodstuff from ASEAN, from other countries where we have FTA agreements at zero duty. So what is happening is that, sure, we want to protect the meat production, but then the consumers cannot afford it, so then they will have to resort to buying cooked and processed food from other countries. So now the WTO, we acceded to the WTO in 1996. That's 25 years ago. If hog industry were a baby then, they will be 25 years old now, and they should have really grown up by now.
Now, how much do you think does your country stand to lose in terms of revenue collection due to the lower tariffs? You have lawmakers pegging it at around 12 billion pesos. What's your projection here?
Well, that's a chicken and egg thing, right? The tariffs will be lost. The tariffs will be lost if the product actually comes in. Mm-hmm. But if you keep it at high tariff, the product will not come in because it is not affordable to the consumer. So what will be lost? There is nothing to be lost. You don't have it in the first place. Mm-hmm. So it is not a realistic projection because when product is too expensive and the consumers can't afford it, you look at the news where they were buying a kilo of pork before, now they are down to 250 grams. Before we were talking per kilo, then became half kilo, then now we're talking go hit 100 grams a piece or something. So it's not a realistic projection.
Won't this be open to abuses here?
Well, look, if the tariff is reduced and there will be in quota, there will be out quota, the gap between the in quota and out quota is now at 10%. That is not a very huge gap to bridge. So what we see here is a democratization of imports. Many people are importing. We've got 300, 400 importers. They will come in. The competition alone will bring the prices down. What is important is that we try to manage the value chain and try to make sure that that unscrupulous people do not corner it. But it will be difficult to corner with the 300-400 players. And then we have to make sure that the benefits read down to the consumer. So we look at the value chain from the import side to the trading side, all the way down to the retail side. Then we have made such a proposal to the Department of Agriculture, and we hope they will take us up on it.
Okay, how far back do you see this setting back efforts to actually repopulate the hog industry?
Well, as we said before, that the hog industry we acceded to the WTO in like 25 years ago, and that was in anticipation of the hog production becoming globally competitive within 10 years, and now it's like 15 years later. So the hog industry should really look at becoming globally competitive without need of tariff protection. So they should invest. We benchmark against other production in other countries. We should look at best practices in other countries. How much does it cost to produce a kilo of pig in another country, and what it takes here? Then we have to understand what is really needed for us to become globally competitive. And when I say that, it is not just from the private sector. The government also has to step in and do its part.
Okay, sir, last question, and very quickly now, do you feel like a state of calamity due to ASF is warranted?
Well, I mean, all the assistance should be given to the hog industry. We are not happy that one sector, let's say our import sector, is growing at the expense of another sector. We want to see all sectors of the economy growing in order to benefit all Filipinos. This is one country, one nation. And we fully agree that all assistance should be extended to the hog sector.
All right. Thank you very much for your time this morning. Meat Importers and Traders Association President Jesus Cham. Thank you, sir.
Thank you for having me.
Here are other headlines we're keeping our eyes on. Economists say COVID-19's impact around the globe continues to affect trade growth. This comes after the country's trade deficit widened in February, as reported by the PSA. For ING Bank senior economist Nikki Mapa, the rebound in imports may be a result of base effects rather than true recovery of the sector. That's because the economy is still stuck in a recession while infections started spiking in March. Mapa believes this trend will continue in the next few months, with manufacturers moving to restock depleted inventories. But for Union Bank's chief economist Carlo Asuncion and Pantheon Macroeconomics Miguel Chanco, the rise in imports will still depend on how the government curbs the virus effectively. On the other hand, Chanco added that continued decline in exports was particularly discouraging. MAPA expects exports to face challenges in the near term due to other countries reinstating lockdowns amid the pandemic. Despite this, Security Bank Chief Economist Dan Roses expects a trade rebound in the second half of the year. That's on the back of renewed demand for inputs once the ECQ is lifted on April 11. The country's factory output declined for the 12th straight month in February. That's on top of posting its steepest fall in 5 months. Preliminary data from the PSA showed factory output plunging 43.6% year-on-year in February. This was faster than the revised 12% drop in January and the reversal of the 0.4% growth a year earlier. The February slump has brought the year-to-date average to almost 28% compared to the 1.4% dip in the same period last year. 19 out of 22 industry divisions saw a drop in February, 14 of these posted double-digit declines, led by the manufacturing of coke and refined petroleum products, machinery and equipment, and textiles. For economist Nikki Mapa, the downtrend in manufacturing and PMI mirrors the weakness noted in our export figures. He also attributed the February turnout to the ongoing lockdown that continued to weigh on manufacturing activity. And that's a first look into the business day this Friday, April 9, 2021. Catch Businessworld live again later this afternoon at 3:15 p.m. I'm Jes Delos Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.